Hello, this is Fahad, and I am back. Today, I want to take a look at Red Hat, symbol RHT. Red Hat is the symbol. So here's the stock. This is the daily chart. We're going to use the same exact every time when we evaluate an opportunity or a trade. We always evaluate it based on three-prong approach, which is the technicals, the fundamentals, and the option activity. So once again, we're going to look at it exactly the same way. So the first thing I'm looking at is the chart itself, which is the technical piece right here. So today, on relatively quiet day in NASDAQ, broadly speaking, where a lot of the other cloud stocks are just, there's a lot of, some are moving, some are not moving. I'm pretty impressed by the candle today in Red Hat. I mean, there is no news out there. I checked all my sources, but this is actually powering higher on a slightly elevated share volume. So we're going to probably end up seeing about total share volume by the end of today around 120, 130% of daily average. So that's actually pretty significant. It's been forming a base for about 2 months now, and it's powering higher today. And I'm looking for a short-term move all the way up to 78, which is this big volume of a price resistance right here. So that's my first target, $78. So currently it's 74.70. So we're looking at about $3.30 to upside on a percentage basis. This is about 5% move to 78. I think it gets there fairly easily. And then we're going to see exactly what they say in the earnings report, which is going to be coming out right here. I believe it's on June 15. Let me just double check that. Yes, it's on June 15. The expiration, June expiration is on June 17, which means it's going to be coming out before June expiration. However, the date has not been confirmed by the company yet, so we'll see exactly if it's going to be that week or if they're going to push it out, which means July becomes more important more important month to go by. But short term, I'm looking for a move all the way, a breakout through this, and then a move all the way up towards 78. And after that, we'll see how the earnings will come out, what the billing cycles looks like and whatnot, and we could then see this power higher all the way through this congestion area and make a run possibly towards the $82 level and then perhaps new 52-week high. All depends on what they say on the guidance. All right. So here's a beautiful setup. It's consolidating. It's been eating and it's going back and forth for about 2 months, and now I'm looking for this to move higher. On the option side, there's very small. It's not significant. I mean, July, remember, is the month that was recently listed today because, this is a brand new month, so the open interest across is altogether is zero. This is the kind of action that wouldn't cross on a lot of people's radar, all right? And so what I'm looking at is this very small call buying picking up in July. In July, 75, 77.5, and 80 strike calls. But more importantly, if you go further out, you're going to see in September, there is this open interest in September 70 and 72.5 calls. All of this was bought on March 24th. So both of these on the September 70 and the September 72.5 calls were bought on March 24th. Collectively between those two strikes, they bought approximately, they're paying different price points, but my bet shows they bought approximately $1.3 million worth of calls between these two strikes. So the open interest jumped sharply at that time, and they remained in open interest. I'm also going to take, and then there's large open interest right here in June. If you go to the front month, June 75 and June 70. So this was a bullish risk reversal that was done a few weeks ago. They were selling June 70 puts, as you can see the open interest right here, and they were buying June 75 calls, which is right over here. So basically, in all 3 months, in June, July, and September, there has been some bullish positioning in the last couple of weeks. The one that gets my interest is the one that are high dollar, high delta wagers, the bullish traders. They always seem to have higher level of conviction, and they're not positioned for short term. And that's in this September right here, in September 70 and September 72.5 calls. That's what gets my interest. All right, so we got some bullish positioning. We got technicals that are starting to look very attractive. There's no news, but the stock is powering higher big time. Now on the fundamental side. First of all, here is my note from the last note from March 22nd. All right. So this is a quick recap of what happened in the what we saw back then on March 22nd. The company posted a monster quarter. We saw EPS beat 52 cents for 47 cents. Revenues beat 544 million, 534 million. The guidance, EPS guidance, was in line, which was not a significant surprise there. But the revenue guidance was pretty attractive, 562 versus 555 million. The 2017 EPS guidance was raised by 5 cents as well, and the fiscal year 27 revenue guidance was also raised. There were a lot of moving parts in that particular quarter. But there are two pieces of items since that quarter that catches my attention, and this is what you need to keep in mind in the coming months and quarters. Um, there is a the a lot of the biggest customer. Let's just put it this way: the biggest customer that Red Hat has been serving for many quarters in the past is Amazon AWS, which led to 180% growth from Q4 2014 to Q4 2015. So over a whole 1 year period, basically call it, for the entire year of 2015. The partnership that they had with Amazon AWS, which still is, by the way, still is a big partnership, led to 180% cloud revenue growth for Red Hat. That's a small piece, that was a very small piece of total revenues that ended up becoming a pretty large piece. What happened in Q1 2016, so basically in early 2016, is that they signed a very large new partnership with Microsoft Azure. Um, the Azure is now becoming slowly a bigger piece while they still have their Amazon partnership taking place. So that's a new growth driver, Azure partnership. Now, there were some expectations that in Q1 we would start to see an uptick in the growth rates related to Microsoft Azure partnership, but frankly, it did not materialize. Maybe it is built into this consensus revenue that the company provided, Q1 revenues that they're expecting, a tick higher. So maybe they were starting to see something now starting to take place with Microsoft Azure. Same thing with the fiscal year 2017 revenue guidance when they slightly moved higher. We don't quite know what the breakdown was, but we do know that there was a massive major partnership that was signed with Microsoft Azure, which is expected to provide new growth to the new leg higher to the overall growth. If it did not materialize in Q1, my expectation is that you're going to start to see some of that in Q2. And so when the company reports earnings right here, you're probably going to see them actually talk about it. So that's one piece of it, which is unknown at this particular point. And I think if it is big enough, it's going to move the needle higher, which means the consensus is going to move the numbers higher. Second thing I want to talk about is every year in late April, in last week of April, the company conducts what they call OpenStack Summit. It's a conference where all the developers and the cloud people, all the companies that are actually making applications on open source networks, they get together in a big giant room and they talk about what the future looks like. It's called OpenStack Summit. And something very interesting came out in the last conference call, or the last conference that took place in late April. I think it was April 28th when the conference actually took place. Bunch of analysts attended that conference, and here is the comment that Credit Suisse made, which made me actually want to go back and look at what has been happening in the last couple of years. This OpenStack Summit conference has been, for the last few years, has been mostly a function of getting to a maturity point in building technologies before they can commercialize those applications. All right. So if I lost you already, just understand this. The last 4 years, the developers have been working on figuring out how to get to a point in the OpenStack applications that they're developing where they can start commercializing, means start selling those applications to the enterprise cloud customers. And I think in what we saw in April of this year, after 4 years of work on it, was first time ever when we saw that maturity level start to come into play, which means now we move from the development side of the work to actually implementing that side of the work. maybe that is why Azure partnership with Microsoft comes into play now with the enterprise applications that that Microsoft sells. So here is the comment that came from Credit Suisse, and I'm going to just read it to you. It says, this week we attended OpenStack Summit 2016, semi-annual event attended by developers, customers, and vendors in the OpenStack ecosystem. We came away with the conviction that OpenStack has moved beyond the consideration phase to the deployment phase. To invest in the OpenStack theme, we recommend investing in Red Hat. And then it talks about valuation and whatnot. So basically, Credit Suisse came out with the final note saying that we believe that after 4 years of work on it, they have moved from beyond the consideration phase to the deployment phase. To make the same exact argument but put it differently, here is a note from KeyBank, who also attended that conference. All right, and this is what you need to focus on right here in the last paragraph. And this is telling me that this is not built into any consensus view. Red Hat remains well positioned based on checks, which is what you always want to focus on when you're evaluating a trade idea, particularly from a fundamental standpoint going into earnings. Based on checks at the conference and the latest OpenStack user survey, Red Hat remains solidly positioned within the ecosystem. All right, Red Hat OpenStack distribution has shown increased adoption in workloads related to production. This was on April 28th. All right, remember 4 years they have been working on this thing. It was in the development phase. It was a consideration phase. They had not moved to commercialize this thing. And now this is a second analyst making the case that Red Hat OpenStack distribution has shown increased adoption in workloads related to production. Okay, but then here is interesting point from KeyBank. It shows OpenStack is promising, but we are not buying into that. We're basing the stock is still based on cloud neutral position and what keeps us buyers. So that's the whole thing right here, right? The consensus estimates are not accounting for what OpenStack may actually do going forward, even though it is starting to show traction as it goes from the consideration phase to the adoption phase. It says right here. This is the fourth OpenStack conference each year has shown increased maturity towards production. Implementations remain difficult and knowledgeable OpenStack administrators are in short supply. But we view OpenStack as a call option for Red Hat's story. Once again, nobody is buying into the story. Nobody is taking the consensus numbers higher, but they all acknowledge that OpenStack is a wild card. It could be a big call option if it starts to come into play for Red Hat's growth story. So maybe that last summit conference that we saw in April, at the end of April, was that turning point. And if so, then I believe the consensus estimate is too low. Putting you, give it to you another way. Here is another note. This time it comes from actually, where was it? No, not this is. This is from Credit Suisse, which I already covered. I have another note over here that actually comes from. I'm just going to tell you. This comes from the RBC Capital. I'm going to have to find it. Sorry, I think I might have closed it before getting on this YouTube video. There was a survey that was done. This was prior to Q1 earnings. So right here is when the earnings came out. Right here. This was a survey done by RBC Capital, also asking users the same question. All right, how much are you ready to adapt the OpenStack software, the environment? This survey was done right around here when the stock was ripping higher big time, went straight up. When that survey was done, RBC Capital came out with a very interesting answer showing that 72% of the users were ready to move forward with OpenStack environment. This was a sharp increase from 40% way back a year ago. So a year ago when they had the conference, on OpenStack Summit Conference, the numbers was 40%, and now it was 72%. So here's yet again a third clue from a different analyst saying exactly the same thing, that I think that we are moving from the consideration phase to the adoption phase, which means the consensus estimates are likely too low. So when I put this whole thing picture together and I look at this new partnership with Microsoft Azure, it's all telling me that numbers have not moved. The stock likely breaks out. purely from technical standpoint, my short-term target is 78 right here. I think it gets there very easily. But I think if it can cross this congestion area that's going to come into play between 78 and call it about 80, it's a $2 congestion area, especially with good earnings report behind it, which I'm expecting coming up in the middle of June. I think you're going to see this breakout and make a run all the way towards mid 80s, which means taking out previous 52-week high. All right, so that's my view. On the option side, so what are we going to do over here? How should we play this? Very simple, no nonsense. Earnings are going to be sometime in the last week of June expiration, which is going to be 1 or 2 days before the June expiration. That unfortunately creates a risk for me because they have not confirmed the earnings report yet. It is possible that the earnings may slip over to July instead of June. And for that reason, I like buying straight July 75 calls. No spreads necessary. This implied volatility is still fairly low. If you look at the implied volatility in September is 26%, December is 28%, January is 28%. So if you're spending 2 points higher for July implied volatility, which is 31%, which is closer to historic level, and how all the other options are stacked up, it's not very expensive, and the delta is pretty good at 0.52. So I like buying straight July 75 calls for 370 or less, and then hold it going into earnings. If the stock runs up sharply going into earnings, then maybe we can convert that into a vertical spread like 75, 85, or maybe a diagonal spread like hold their 75 July calls and then sell maybe 77.5 June or maybe 80 strike June calls. So convert it into a diagonal call spread. But for now, let's just go with straight July 75 calls for 370 or less. That's it.